Thank you, Gwen. My goodness, good to be back here. This has got to be the 6th or 7th time I've spoken in front of Metals Investors Forum. Some of them were online, some of them in person. Got to be the best turnout I've seen in a while, despite the market. That lunch line earlier was ridiculous. I'm not sure if this is an investment conference or a soup kitchen, or maybe a little bit of both. But it's good to keep your powder dry. So we got 2 companies left here, and I'm going to tell you why I'm all in on Blackrock. So forward-looking statements, obviously. If you've got nothing to look forward to, what's the point? We've got a project where the yellow brick road's laid out pretty clearly in terms of what's going to happen with it. There's no rocket science there. The question is, how much time do we compress, and how many ounces are we able to add before someone wants to take it? It's been a wild ride. About 3 years ago, we picked up our project right as COVID was coming to a close, or beginning, the lockdowns at least. We acquired our project. Silver was $12 in April of 2020. We started drilling it in June. Over that course of time it took to get our first drill results, silver went to $30. We added about $120 million to our market cap on that first discovery hole we made. Best of times, worst of times, because when we hit, silver was $29.30. Here we are today, $19.20. We've been fighting the market this whole time, and it's been a wild ride. But what you'll see is it's been volatile, and volatility is where you make your money as an investor. 5 different times since we've hit. Despite the market, we've been well over north of $1. Along that way, we've completely turned over a shareholder base. We're about 50, 60% institutional now. We've got the technical validation of First Majestic Silver, who changed their corporate motto when they invested in us from 1 country, 1 commodity, to 2 countries, 2 commodities when they got into Nevada. They've made 2 investments with us along the way. Since then, we've also picked up a lot of analyst coverage. It's very difficult. When I stepped in 3 years ago, May of 2019, we were 3 cents and $1 million market cap. Not a new deal. There's no seed stock. This is a turnaround. Built the whole team from scratch, and this is a new asset that we did it on. If you were to tell me 3 years ago at $1 million that we'd be $80 million today and I'd be pissed off about it, I wouldn't have believed you, but here we are. One thing that I can say, and I've worked in the business for 15 years now, is never trust a chef that doesn't eat his own cooking. This sell-off right now hasn't been good. It's been a riptide for everyone across the industry. We're good swimmers with our project. What I see right now is an opportunity for us to accumulate. I've put over 200 grand of my own money in the stock in the last month and a half. I'm buying. I see this as an opportunity because the pendulum swung. We're below the cost of production for most silver companies right now, and we've got the highest grade asset in the industry that's not developed, that's not a mine. So this is I don't show this slide to impress you. I show this to impress upon you, effectively, the ride that it's been. So out of 25 silver and exploration development companies charted since April of 2020, when we picked our project up, we still, despite the sell-off, given the 3rd best return on investment. Now, that's sort of like saying you're the best-looking person in a burn ward in a market like this, but what we're saying is that we're relevant. Along this way, we've been number 1 or number 4 this entire time. But when the market does come back, it's going to go to the quality stories first. We've got the jurisdiction, we've got the grade. So what are we talking about? We've got the Tonopah Silver District. 120 years ago, this is the center of the mining universe in America. It's the 2nd largest silver district historic in Nevada, which is known as the Silver State. Second only the Comstock Lode, but whereas the Comstock petered out naturally between the 1860s and 1890s, ours didn't peter out naturally, and we've proven that now. We picked this up in 2020. We're the first group to conduct modern exploration since production shut down in about 1930 at the onset of the Great Depression. Now, these shut down during the Great Depression because, 1, metals prices silver price went from $1 an ounce in the early 20s to 25 cents an ounce by the early 1930s, sent everything in the district belly up, and no one could raise any money because it was the Depression. But in those 30 years, they produced roughly 2 million ounces of gold and just under 200 million ounces of silver. We had a very simple proof of concept when we picked this up 100 years later, and that was that the old-timers didn't shut down because they ran out of gold and silver. They shut down because they lost because of metals prices. And since then, we've now backstopped our valuation with the highest grade ounces in the ground in the industry. In a year and a half worth of drilling, we went from one drill hole in our database, no one had ever drilled this project, to delivering this resource. And this resource is literally just the two areas of our project that the old-timers were mining and got cut short. Well, in a year and a half, we've got about 43 million ounces, 3 million tons at 446 grams per ton, diluted. That means we factored in dilution into this, which is something you should always look out for when looking at resources. Now, what you'll see, what I'll draw your attention to here is not only did those old-timers leave 43 million ounces behind, and I'll show you another slide, but it's the margins that you're potentially looking at. Anytime your cutoff grade, anytime your average diluted grade is more than double the cutoff grade, you're making money hand over fist. This is going to be, if we get this there, a very, very low cost, potentially robust margin mine. So here's where we are in terms of the market. The x-axis along the bottom is the grade, and the y-axis at the top is how we're trading ounce in the ground valuation. Now you'll see in terms of grade, there's nothing else like it. Now in terms of that, that's not because there's not higher grade mines that are operating, there are. It's because that any other development or exploration discovery with our profile was developed and turned into a mine. That's what we're sitting on right now. And the other thing that we have is, you'll see up in the top right of the corner there is Silvercrest. Silvercrest, the big kahuna. Well, guess what? Their maiden resource they put out in 2018, nearly identical if you constrain it the same way as ours. They put out about 3 million tons at about 550, 560 silver equivalent grams per ton. That was undiluted. We put out roughly 3 million tons at 450 diluted. That's the same grade, that's the same tonnage, just constrained differently. What we're showing is that as you move the project forward, we've got highly leveraged to the price of silver. You'll see that right now, we're trading right up there on an ounce in the ground valuation basis with Vizsla and with, you'll see New Pacific and Silver Tiger. Everyone's sort of here at the 120, 130, 140 an ounce in the ground. 4 months ago, 5 months ago, when silver was $25, $26, analysts were saying that our ounces should be worth about $2.50 to $3 an ounce in the ground. Now, a 25 or 30% move in the price of silver should relate, even if we do nothing, we just close up shop, should be a significant move. We're highly leveraged. But we've got expansion potential and we can de-risk the project further too. That's how we move up like Silvercrest did. So this is a real estate consolidation, not an exploration endeavor, really. We're picking up in a historic district where old-timers left off. These claims parcels, what makes this unique, not only are we in Nevada, off a highway, walking distance to a town, these are all private claims. It's patented, it's private land. Most of these claims have been held individually since production shut down, and it was us bringing these together in 2020 that really brought all of this goodness that had been hiding in plain sight together and made it worth drilling. Right next to our project is a mining museum talking about the significance of our project, and that's been there for 20 years, and it overlooks our head frame. You'll see right here in this map here is those squiggles that you see on the on the eastern side of our property. That's the old mines. It just represents the levels of development that they did. And you'll see that they mined out a lot of the northeastern portion, which we call Victor, and you'll see they drifted across, giving us a roadmap to the center of our claims package, which we call DPB. Well, just at depth, just by going a little deeper in that northeastern portion at Victor, we've shown that there's about 25 million ounces still left, that the old-timers left in that northeastern portion. At DPB, we've now hit kilometers and kilometers and kilometers of the same vein system that they were preparing to mine, but never got around to it. These, you'll see there's green polygons. Those outline just the resource areas that we backstopped with these ounces on that year and a half of drilling. Well, we've stepped out 1.6 kilometers, and we're tracking the same veins. We're not needing to make new discoveries. We're literally just taking that thread and following it all the way along, and it's open all the way, it looks like, to the western property boundary there. What we know is that between those two areas we drilled out, that represented about 1,200 meters of strike in totality. Well, we've already established that we've got another 1,600 meters of that same vein system with good grades and high-grade chutes. and it's still open. We've got a 500-meter step out beyond that in the lab. And it's easy to break out the ruler and realize, okay, well, here's roughly how the tonnage is, roughly the vein thickness and the average grade. What we're doing is showing that the old-timers left a whole lot behind, and it's amazing that it's been sitting there. Now, if you could ask me what other commodity I'd want to be in right now, if I could choose two, I'd want to be in the most oversold commodity on the planet, which I see silver, and I'd probably, if I was making a pizza and had a shell, I'd probably toss on the most expensive one too, the one that's already at all-time highs and looking like it's going to push through. And we actually just hit a substantial lithium discovery 2 weeks ago. In this area of Nevada, not only is it known for the silver and gold deposits, but it's right on the doorstep of Clayton Valley, which is the center of the universe in the lithium district capacity in America. Well, we're hitting very, very good grade, big tonnage potential right north of our project, which is very similar to two deposits right next door to us, both of which from a lithium point of view, command substantially larger valuations than we do just for our silver. We've had a lot of interest come in on that front, and I can say that, we're in two good commodities. Silver's one that I think, that's our main focus. We're going to keep riding that till we're done with it. We've got something special, jurisdiction, private land in Nevada, infrastructure's there, no camps, no nothing. The metallurgy's great. We know that because they've already produced nearly 200 million ounces of silver. And guess what? We've got a lithium kicker. So with that, I'm going to hand it over to the next presenter. And yeah, there you go. Cheers.